brought to you after the New York close. Today's member is sponsored by FXCM Excellence in Trading. Traders, please come and visit our site at fxclearing.com for your trading solutions. Traders, if you would, let me introduce myself to you, but just let me give you a little brief of what we're going to do today. We have about 15 daily charts what we're going to take a look at. We're going to look at what happened last week and maybe what's going to happen next week, and see if we can look at some price patterns and see if we can figure out what the heck is going on in this crazy market. All right, if you would, let me introduce myself to you. My name is William Gilday. I'm your moderator for the Friday Wrap-Up, which is brought to you every Friday after the New York close. Today's I'm glad to tell you that it's actually morning in sunny Thailand, and it's very hot. Absolutely beautiful. Traders, I started trading in the year of 2006. In 2008, I retired from a wonderful 27-year career at the Fire Rescue Department out of the great state of Florida. Traders, I apologize for any background noise as it is our festival week. It's sort of like a Mardi Gras, but it's the Kingdom of Thailand's birthday. So today's like the big day, and there's bands playing already, and cars are up and down, hooting and hollering, so I apologize for any inconvenience there. Traders, I do trade the Forex market every single trading day, and yes, I do lose trades. I lost 2 of them on Friday. I actually lost 2 trades. Unbelievably, but yeah, I did. And I'll show them to you, and they're pretty stupid on my part, but that's okay. We all make mistakes, and I learn from that. All right, let's get over to the risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex market. Traders, do not trade with money you cannot afford to lose. That is so important. Traders, if you can't afford to trade, use a demo account until you have some equity that you can put into a live account. To me, now in these trading markets and sentiment of the market, I mean, you really need like a minimum of like $3,000 to $4,000 in a live trading account, so you can trade micro lots or mini lots and be safe. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. And let's head over to commentary. What a week we had this week. Was quite very interesting, as you'll see in the charts. We had a huge sell-off, and the dollar was strong and all that stuff. Well, what happened was the dollar went flat, as you know, and then we lost our strength. And wow, did the charts and the markets take advantage of that. And I think the reason for it is we had a lot of bad data come out of the United States, and that is basically told us that our good old rising of interest rates might be put on hold or delayed. So it's going to be very, very interesting to see how we move along with this and what the Fed is going to say. They're going to have to come out at some point and say something and give us some idea what they're going to do. I'm hoping they're not waiting until the next NFP, which is over 2 weeks away. All right, that's my commentary for the week, and just be careful when you're trading. So let us look at the daily charts. And traders, remember, these are daily charts. They're all daily charts. They don't say daily charts on them unless you look at the bottom of the chart. You can see where it says all daily. But these are daily charts. And as usual, we are going to start with the euro dollar. This is the euro dollar chart. As you can see, it's a great looking chart. It's stair-stepped its way down. We had that 1, 2, 3, 4, 5, almost 6 days of down. And what happened this week? 1, 2, 3, 4 of an up day. Right, so Monday closed as a doji, and the rest of the week closed as an up day. And the euro continued to climb. Now, do I think that's going to stay sustainable? No. And why do I say that? Well, number one, we're at resistance right now. And the second thing is, it hasn't taken out any specific highs, hasn't taken out the 1065, 1070 area. So this is not, to me, saying that, we have a change of trend and the euro is now going to go back up to, 1.18 or 1.19. I don't see that happening in the near future. I expect dollar strength to continue once the Fed confirms what they're going to do. See, traders in the markets don't like uncertainty and not knowing what's going on. Once the Fed says what they're going to do, then the markets will react and stay with that reaction. What they don't like is the Fed said they're going to do something, and then we get a bunch of bad numbers. And of course, media, in other words, the gurus that really don't know a thing, are saying how they're going to delay interest rate decisions, and the Fed has never even come out and even mentioned it yet. But the CNBCs and the Bloombergs, they've already started. Let's go to our next pair, which is our dollar Swissy. And as you know, the dollar Swissy is correlated with the euro dollar, and we would expect us to see a down day. This is a very interesting chart. I'd really like to see this chart on our next Asia session, as we are coming up to the 200 exponential moving average. And this pair likes that 200 exponential moving average. So it is going to be quite interesting, to say the least. All right, let's move over to the pound dollar, one of my favorite pairs, and I got stymied on this one on Thursday. That was a red candle. I trade Asia because I'm in Thailand, and I trade Asia and the beginning of Asia, and about 4 hours into Asia, this was a really nice red candle, and I thought, and it was at resistance, and I said this thing's going to head back to the downside. What did I do? I took a short trade. Well, guess what, folks? It went the other way. Yep, I lost that one. But what are you going to do? Things like that do happen. So if you're going to ask me, like, well, what's going to happen, next week at the next Asia session or on Tuesday? Well, that's a very good question, because if you look at where price stopped exactly at resistance. Look left of the chart. Traders, if you learn nothing else from me, you're going to learn to look left of the chart. That is a lot of junk to get through. There's a lot of resistance there that needs to break through to continue. And then you move up a little bit, and what do you got? You got another resistance level. Then you have a wide open space to the 200 exponential moving average. So that's going to be quite interesting. Traders, let's take a look at the dollar yen. Now, the dollar yen mimics the dollar index. So if you were to take a dollar index chart and stick it over this dollar yen chart, you would see that they're pretty much identical. I mean, there is some change, but they're pretty much identical. So quite interesting on that part. So what is the issue here? Well, you could see that we've had, 6 days of down move, but if you take a look left of the chart, that red candle with that big spike, it still has not taken that out yet. And we've been talking about that for a long time, that spike. That has not taken it out yet. So let's see what happens with this dollar yen chart as we move into the week. And let's hope the Fed comes out with some statement or some kind of I don't think they're going to give it, the Fed's not going to turn around and say, hey, listen, on November 3rd, we're going to raise interest rates. They'll never say that. But I'd love to know what Auntie Yellen, good old Fed chairwoman Janet Yellen, has to say. No, I didn't come up with that. A friend, well, not a friend, but somebody on another website came up with the old Auntie Yellen. I'd love to know what they're talking about. So on Friday, we had 4 people from the FOMC talk, and they were all dovish. They were all down, and that's why the sentiment of the Fed is going to delay interest rate hikes, which, in my personal opinion, I think is a huge mistake. But that's only me, and nobody called me and asked me, so it's okay. All right, let's take a look at the euro yen, one of my favorite pairs to trade. Look at this, nice down week the week before. What happens this week? 1, 2, 3, 4 up days. Guess what? That was the second pair I lost this week, and for some reason, my trade manager, which manages my trades, never accepted my loss, and my stop loss, and I didn't realize it. So I took a pretty big hunk on that one. But it is what it is. I only trade 1% of my account per trade, but I think I lost probably like 3% on this specific trade. But there's plenty of equity for me to trade the next week, and that is the whole idea of trading the markets, and that is capital preservation to trade another day. Let's take a look at the beast, the pound yen, another one of my favorite pairs to trade. I mentioned this last week, well, it might have been the week before, that the pound yen loves the 200 exponential moving average. So what does this do? This comes down, and now 6 days later, it comes back up to this 200 exponential moving average. So who knows what's going on with that? Now, not to get off on a tangent, let's talk about the yens. Kuroda is speaking, Abe is speaking, and they keep saying that they have other ideas to stimulate their economy. Well, folks, that means they're thinking about doing an intervention, and we're going to have to be real careful if they do an intervention. So, and they never tell you when they're going to do it, and they always do it when you least expect it. The market open, their lunch hour, or 10 minutes after that market closes. So they never let you know when they're going to do it. They're very secretive when they do any kind of move out of the yens. Let's take a look at the Aussie and some pretty nice, this was giving us some nice price action here. This nice move down, I don't know, it's probably over 2 weeks of down move. Nice move up and then came back down, nice move up again. But where are we at? Take a look left of the chart. We are in a mess. That is very strong resistance. So we would expect that we're going to see this end up, I would say we're going to see a blue candle at our next Asia session, and this is going to continue to the downside. So we'll see how that goes. The issue is, as always, the Aussie is a commodity pair. So once data comes out or someone speaks on a microphone, the Aussie reacts to it. It's probably the most volatile reacting pair to news is the Aussie pair, whether it's the Aussie dollar or the Aussie yen or whatever. As long as it involves the Aussie, it is very volatile. Well, let's take a look at the Aussie dollar, one of my favorite pairs to trade. But what a nasty chart this is. Again, take a look at the bottom of the chart. There's that big red wick I was talking about. Never took out that support. What does it do? It goes back up a little bit, goes sideways, and then, here we are, Wednesday, Thursday, Friday, and I'm sorry, Tuesday, Wednesday, Thursday, Friday, and on Friday we get a red candle. And just to note that the indices in the U.S. and in the Eurozone were all in the red. So quite interesting on that note. Let's take a look at the Euro Pound. This was in a really nice moving action. It still is, in fact, and I'm expecting an update here, believe it or not, because I'm bearish in the pound, but this looks like this is going to continue to the upside. So we'll just really keep an eye on this. I don't trade this pair. It's just not. I can only look at so many pairs. There's 42 currency pairs, and I look at 8. So I don't trade this pair. So I'm really not on it as much. Now I want to show you a chart that is a chart that shows you how crazy price action can get. And I trade this pair a lot, but I hadn't lately, and that is the New Zealand dollar. Take a look at this. This is very significant. This came, it spiked up through resistance, and look at where it closed on Friday. It closed below the resistance level. You see those two red wicks? Closed below it. All right? So it spiked through it, couldn't hold it, and ended up coming back down. This is another pair that really enjoys the 200 exponential moving average. So what's going to happen? I would expect this. This is either going to go sideways or we're going to see this take a drop. And that's going to depend mostly on the dollar. Again, this is a commodity pair, so it reacts to any kind of news event or anything that comes out. The other nice thing about the New Zealand dollar of trading this pair is that it responds very well to its own data. So when there's data released out of New Zealand, it reacts very well to it, and it gives you a direction pretty quickly. Unfortunately, most of the time when their data comes out, it's 4 o'clock in the morning for me, so I do miss that. Let's take a look at the dollar CAD. A dollar CAD is correlated with the pound, and the pound has been up, so you would expect to see that the US dollar CAD is on a down move. Those are the only two pairs that I think have correlated pairs, and that's the euro and the pound dollar. But this is actually, this can really head in any direction. This is pretty interesting to see. Again, we have dollar weakness. So, good idea to keep that dollar yen chart up, and good idea if you have the dollar index chart, have that on your platform and scan that and take a look at that every time you get an opportunity to. So let's go over to another pair. This is our pound Aussie. I just put this up here because it has the pound Aussie and it's in my list of my daily charts that I do every week. This is what I would call a very sloppy week. This was up, down, and all over the place. And if you look left of the chart, that is not trending. That is ranging. Now, there's a lot of pips there, traders. These are daily candles. So that blue candle, that's probably a 50 pip candle right there, maybe even more. So you have to realize what you're looking at. But when you go down to the lower time frames, which we will mostly trade, whether it's the 15-minute, the hourly, or the 4-hour, 30-minute, that's a whole different story. This would look like this is going through the roof if you looked at that blue candle. But always come back to the daily chart as a reference point. I call it the master chart. Always look at the daily chart. And ending our charts this week, we come to the Euro Aussie. This did exactly what we expected it to do. It came up to that 200, dropped like a rock, and basically gave us 2 up days, 2 down days, could not break support, and came back up again. Again, cannot break the support level. So what happens when it can't break the support level? It bounces. So this was pretty easy read, even though the chart looks horrible for the last 7 days, 8 days. But you could see, if you look left to the chart, and you see where that this was definitely at support, and you would expect to see that bounce. I did not mark that spike, but it looks like that spike took out those 2 red and blue candles, which was support. Looks like it might have taken that out, so it might have spiked support, but it sure didn't close below it. Traders, on behalf of myself, William Gilday, and our great friends at FXCL, Excellence in Trading, I'd like to thank you for joining me this Friday after the New York close. I wish you a great weekend. Enjoy time with your loved ones, friends, family, and have a great weekend. Get some rest, and make sure you do some Forex homework. And we'll see you next Friday for the Friday wrap-up after the New York close. Traders, take care. Have a great weekend, and we'll catch you next time. Bye-bye.